Good day, subscribers. Welcome back to the Contrarian, everybody. Today I'll be talking about the gold market, what it's doing in China right now, looking especially at the Shanghai Gold Exchange that has just reached a record uh, difference between what the London Gold Exchange, what the New York Gold Exchange is selling gold for versus what Shanghai is. But also looking at China and what is happening with gold in relation to what we could reasonably expect gold to do for the United States, for other markets, as the central banks tend to follow suit. Obviously, China's central bank has pivoted, the first of kind of the major central banks out there. Of course, China has had issues with their real estate market crashing, other things as well, which has slid their economy, precipitously from where it was a year or two ago. They had a pretty strong recovery out of COVID, of course. Factories resumed and everything in China, nowhere near to the extent that they were before COVID, but since then we've really seen a slump, especially in real estate. That's kind of brought the rest of the economy down with it. Inflation's come down a lot in China. It's definitely not a concern there in China. And so the central bank, People's Bank of China, has pivoted. They're back to quantitative easing. They're back to a loose monetary policy by and large. And so gold has been on a tear versus the Chinese yuan. And so basically just looking at what could we reasonably expect the price of gold to do in other currencies, the euro, the yen, the dollar, when these central banks begin to pivot, when the economies of these central banks that they're governing go into recession, when inflation comes down, it's not as much of a concern, or it isn't a concern at all. These central banks are going to pivot, and it does point to the direction that yeah, gold is going to go higher in the dollar probably very soon. Now, what's thrown this off recently is the dollar's actually rallied again relative to other currencies. So DXY is back about 106 now. It's rallied, had a strong rally in the last couple months. And so, regardless of that, the price of gold has actually stayed very strong in dollar terms. So this is actually surprising for me, looking at how much rates have gone up, how much the dollar has gone up in the last couple months. I would expect gold to have been down a lot more in dollar terms than it has. So it's actually a very encouraging sign that the price of gold in US dollars, it's stayed above about 1900 so far. And so this is very encouraging. A lot of gold bugs don't seem to realize this, in my opinion. There's a lot of people who have definitely left the train, who were there maybe a year ago or 2 years ago. They just lost patience with the gold market. I am not losing patience there. I think there's tremendous potential there for when this does pivot, when the bandwagon does change, when most of all, when sentiment changes. It's been in the toilet for a while. We've had some brief, rushes of euphoria, or getting close to euphoria, when Russia invaded Ukraine, and then when the banks failed early this year. Gold rallied in both of those scenarios, and then it sold back off. In both those cases, it reached about the resistance level near 2100, which that's really my target of when gold breaks through 2100 decisively. That's when we're going to start seeing momentum traders get back in, hedge funds, algorithmic traders, everybody's going to get back in. That's kind of when the party really starts, in my opinion. But gold is not far from that level right now. It's maintained about 1900 the last couple of months. It's sometimes gone a lot higher than that. And yet sentiment is somehow in the toilet. Mining stocks are down significantly again. And so, the sentiment really does drive the gold market. It's a very, very emotional market. Um, Something I will point out is gold in the past has really front run when the Fed has pivoted. And this really does illustrate the discounting nature of markets. Markets are really trying to anticipate what happens in the future. And so typically in the past, gold has really front run major Fed policy decisions by about 6 months. That's kind of when the really large rally, significant rally started in 2008 to 2010 or so. It did, advance. It did go in advance of the Fed's massive monetary policy shift by about 6 months there, and it has by and large done that as well. So even if the Fed doesn't pivot soon, I wouldn't be surprised if gold starts to pick up in US dollar terms, just because, it could be reasonably expected that in 6 months the Fed might be pivoting from now. I don't know that for sure, but if gold does begin to move decisively, it could kind of almost be a warning sign, a preliminary act to the Fed pivoting. But getting back to what the price of gold in Chinese yuan and on the Shanghai Gold Exchange is doing versus price of gold everywhere else, it really illustrates the price that people are willing to pay for insurance when economic hardships hit, when economic controls by the government hits. China specifically has fairly tight capital controls right now, and so it's not like Chinese citizens can just go buy gold on JM Bullion or some other dealer like that. They have to buy gold on the Shanghai Gold Exchange. And so, that does really make it possible for the price of gold on the Shanghai Gold Exchange to now be about $100 higher per ounce than the London and New York exchanges. So, it's about $2,007 right now, which is about 6% higher than the price in London or New York. And yes, it's a flight to safety with the yuan falling, the property market slumping, and capital controls keeping money from leaving the country. Investors are buying gold, which is not surprising. Eastern people, especially, they just see gold as money. And even if it's not officially backing the Chinese yuan or the yen or any of these other currencies, the rupee, Eastern people really see money as gold. It has been money, gold has been money for millennia. Of course, everyone's heard the famous quote by JP Morgan of gold is real, basically, gold is money, gold is real money, everything else is credit. So central banks can invent credit, they can invent treasury notes and dollars and British pounds and whatever currency is going on right now. But in when it comes into reality, precious metals have played the form of money for millennia, and I don't expect that to go away anytime soon. Um, anyway, getting back to this article, the so-called Shanghai Premium started rising this June, a response in part to import curbs imposed by the People's Bank of China, which may have been trying to shore up the value of the yuan by shrinking the need for dollars to buy gold. But now the currency's plunge is having the opposite effect as investors chase dollar-denominated assets to preserve value. So that's interesting. It says that investors are chasing dollar-denominated assets. Um, because they're really chasing gold, which is not dollar denominated. This might be in part referring to U.S. Treasuries and Chinese investors still buying U.S. Treasuries, but it's also interesting to look at what they say has happened with the rest of the market in China, and they say that rates have fallen precipitously, and things like that. Yeah, so um, tumbling bond yields. It's no mystery why demand for a safe haven like gold would soar. Tumbling bond yields is a big thing there because, in the US, we've seen treasury yields go a lot higher than most people, myself included, would have thought would be possible in this short amount of a time frame. We now have the 10-year bond about 4.5%, the Fed funds rate about 5.5%. So a very inverted yield curve, but very elevated as well. And it's been, very there's been a very high rate of change from where it has been. So it's also interesting to look at the effect that a flight back to safe haven assets does have. Like with China, rates have come down. I would expect the same to happen for the U.S. Treasury market, although people are calling right now for higher rates. Um, anyone from Jamie Dimon, especially recently, he's come out saying he expects higher rates. Um, other investors too. Peter Schiff perhaps is saying that he expects rates to go higher. I'm not on that bandwagon yet. I just don't see that much inflationary pressure out there. I get that oil has rallied. I get that some other commodities have too. But, apart from that, I just don't see the pressure for inflation to really get back, the force that it had about a year ago. I think it will be kind of a short-lived bond sell-off and rate rally. That's just my expectation. None of this is to be taken as advice in any way, but especially when I see uh, sentiment gets so negative surrounding treasury bonds when they're actually yielding pretty incredible yield. Like, you haven't had this yield on the treasury market since 2000, so 23 years ago. It's a pretty incredible moment right now in the bond market. So I do expect that investors will kind of wake up to that in the coming months. But all that being said, I could be wrong there, but I do think that rates will come down as well as the dollar in the coming months. So all that being said, I would love to hear your comments on all of this: the price of gold on the Shanghai Exchange versus everywhere else. What is really causing this? Yeah, what does this mean for where the US is headed? But all that being said, I hope you enjoyed this video, and I hope to see all of you again at some point.